Hello everyone, Todd C. Slater here, The Simple Investor, and today I want to talk about negative cash flow and how do we manage it. For most of you, you already know that I'm a big fan of investment real estate that has positive cash flow. But what happens when you have negative cash flow? What are you really trying to do? Being a nonprofit organization is not a good idea when we talk about investment real estate. So what's the answer? Well, negative cash flow for most people is just a method to speculate on real estate. So in other words, they're going to buy something today knowing that they've got negative cash flow, hoping that the capital gains, the increase in value, is going to offset their loss. So how long do you have to wait? How much does the price have to go up to make it make sense? Well, this is the thing that a lot of people have to think about for their own threshold. So, hypothetically, if we take a look at the greater Toronto real estate market, we take a look at downtown Toronto and the condominiums there, the majority of them over the last 5-6 years that have been purchased would all have negative cash flow. Even though we saw a huge increase in rents in 2019, they were still negative cash flow. And what the number actually means is the fact that the prices are up too high. Even with a leverage point, you're into negativity. So how much money do you have to put down to be able to get positive, or let's say a neutral cash flow? And this is where sometimes for a lot of people, it doesn't make sense to invest. So the people that are normally looking at negative cash flow, they're looking at the huge equity appreciation to later dump the property, and then they're going to incur capital gains, which means that they're selling it for a profit. So at what point does it not make sense at all? For a long time, pretty much most of the major centers around the world, the cities that were putting up brand new condos, those properties you pretty much could count on going up year after year. And if you're looking between a 7 and 10% annual increase, then the chances are you're working well with a speculative approach, which means negative cash flow will be offset within a certain period of time. But at what point is enough enough? I look at it and a lot of people will sit there and say, hey, Todd, I want to create a real estate portfolio and I'm looking at having the values increase a lot. Well, when you do that, the chances are coming into the market, you're going to have negative cash flow. And then each month, you're going to have to offset the actual expense. So what is your offset? Well, that's going to be what can you manage? So many people will turn around and say, yeah, it's negative cash flow for $500 per month. All right, so you can manage that. Now, if you turn around and say that's $6,000 a year, but if the property goes up in value, let's say you've bought a condominium for $600,000, it goes up by 5%, that's $30,000. So you're saying the net effect is better. So truth be told, you know what? You are ahead of the game. But what happens if it stops going up? What happens if the tenant doesn't pay the rent? What happens if your negative cash flow gets greater? Now, the one thing that we do always have to remember is that you also have to get financing. And if you want to have multiple properties, eventually the lenders will say, you don't have positive cash flow, you have negative cash flow, and this will affect the borrowing ratios. So in other words, what we call your GDS and your TDS, so your total debt service. And when we take a look at these numbers, the banks are going to get stricter and stricter. So where does negative cash flow come into play? Well, one of the things I always want to make sure is that first and foremost, you can afford the negative cash flow. So you actually have to sit there and say to yourselves, yeah, great, the value's going up, but can I actually afford the extra money per month to maintain the debt level? That's the first and most important question you have to ask yourselves. It's great to turn around and get all hyped by the market. It's great to hear everybody saying, oh, the values are going to go up. You're going to make $100,000. But if it takes everything you've got to get there, if you put yourself in a precarious position where maybe a couple months you can't make that extra payment, or your tenant doesn't pay you, then you've got to be very careful because this could have catastrophic results to you. So these are the kind of things that when we talk about negative cash flow, can negative cash flow work? It can, but only if you're truly looking at a huge capital appreciation, meaning values going up. Today, based on the world pandemic, I would say I would caution anybody for speculative approach in real estate. You should be delving into properties that are positive cash flow only or a neutral cash flow. even when people start talking about only a few $100s, that will add up over time, and you need to think about where you're going to be. So anyways, negative cash flow, positive or negative? Well, I don't think it's a real positive, but if you're going to speculate, then maybe, just maybe, you can get ahead of negative cash flow. Other than that, if you're going to be a real estate investor, you want to hold long-term, and nobody wants long-term negative cash flow. It's really counterproductive of what you're trying to do. So that's just my take on that, and thanks for tuning in this week. I'm Todd C. Slater.